Hello, everybody, and welcome to Taking Stock. I am Kalila Reynolds, and it is my pleasure to host this wonderful show for you yet another week. Remember, we're bringing you all the latest business news and telling you how it will affect you and your money. And apologies for the technical errors we are facing right now, but we do have a very interesting and exciting show for you. Don't forget to head over to my website, KalilaReynolds.com/newsletter, to subscribe to our newsletter and get all the latest breaking money news alerts directly to your email inbox. Now, come on, let's get this money. Fesco's net profits are up 162% for its fourth quarter. That's a $97 million jump. Go Fesco, it's your birthday. What drove the company's high performance 1 year after its IPO? We'll find out from Managing Director Jeremy Barnes. And the analysts weigh in on the latest market developments. They'll give their take on Fesco's results and whether Jamaica is heading towards a recession. And overseas, an intensifying focus has been placed on the cryptocurrency market after a week of volatility. We'll discuss. But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
Minister of Finance Dr. Nigel Clarke is appealing to public sector workers for patience as the government completes its compensation review. His plea follows last week's slew of industrial action. NWC workers went on strike last week, resulting in disruptions in water supply island-wide. The workers were demanding that their compensation packages be renegotiated. That was followed by air traffic controllers shutting down the island's airspace after refusing to work because of a faulty radar system. That cost the country millions of dollars in lost revenue and affected some 10,000 travelers. Then on Friday, National Housing Trust workers walked off the job after also expressing displeasure with their wages. In a column in the Jamaica Observer, Dr. Clarke said that restructuring public sector compensation has not been easy, but assured that the process is in the final stages. The minister said the changes will improve transparency, increase equity and fairness, and improve compensation levels. It's about to get more expensive to wipe your behind. A shortage in pulp is expected to drive toilet paper prices higher eventually. Pulp is a wood-based, biodegradable raw material used to produce paper, tissue, board, and other products. According to a Bloomberg report, global pulp supplies have been falling due to the war in Eastern Europe and continued supply chain challenges. Trade with Russia, which is a major source of wood for Europe, has been completely blocked following the country's invasion of Ukraine earlier this year. That means pulp producers in Europe have their production capacity curbed. New lockdowns in China have also contributed to shortages. Analysts say that the shortage will eventually lead to higher prices as manufacturers try to compensate for more expensive raw materials. The Bank of Jamaica says the national rollout of Jamdex, Jamaica's central bank digital currency, has been delayed. Jamdex is the digital form of Jamaica's currency. It's issued and backed by the BOJ. It was expected to be fully launched in April, with the government announcing a $2,500 incentive to the first 100,000 customers who signed up for the digital wallet. But the BOJ now says it will continue a phased rollout of Jamdex while changes are made to the Bank of Jamaica Act. The amendments will make Jamdex legal tender and enshrine the BOJ as the sole issuer. Apple has announced that it will be discontinuing the iPod more than 20 years after it was launched. The iPod was released in 2001 and was the first MP3 player capable of storing 1,000 songs. The most recent version of the music player, the iPod Touch, has not been updated since 2019, with many of its features now being available on other products. Apple said it would continue to sell the Touch, the only generation of the iPod still on sale while supplies last. The Elon Musk Twitter saga is heating up again after Musk announced that he is putting a hold on the acquisition. The deal is on hold until the social media company proves that only 5% of its accounts are spam. Musk had originally committed to paying $44 billion for the company, but analysts said that he could use the spam account issue as leverage to renegotiate the price. In its first quarter results, Twitter reported that it had 229 million accounts that were served ads. If 5% of its accounts are fake, then that's over 11 million accounts throwing off advertiser numbers. So, the Tesla and SpaceX CEO could end up paying less for the company depending on the level of spam found. Musk has said he is still committed to the acquisition, but if he were to stop the deal, he would have to pay a $1 billion breakup fee. What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart.
Spur Tree stock is up 300% in just 3 months since its IPO, and Fesco stock is up 1,000% since IPO a year ago. $10,000 invested in Fesco a year ago would be worth $100,000 today. And while these results aren't guaranteed, you need to learn how to start investing so that the next opportunity doesn't miss you. Take my Investing for Beginners masterclass and learn the basics about stock market investing, how to decide what to invest in, and how to get started at KalilaReynolds.com/masterclass. But wait, there's more. Get my broker guide, stocks tracker, and free access to my newsletter when you subscribe today. Go to KalilaReynolds.com/masterclass. Let's get this money. This segment of Taking Stock is brought to you by Bulwark Insurance Agency, insurance made easy, and
download today. Register using your existing NCB online banking login credentials. To open an account or get more info, contact our Wealth Hub today.
Welcome back. Shout out to all our early viewers. Let me see who's checking in. Jason was on from 7:54, so waiting like 6 minutes before showtime, saying 8 p.m. taking too long to come. Well, we're here now, Jason. Big up yourself for being the first person to comment tonight. King Irie says, good night, everyone. Let's get this money. Lavar is checking in from Mandeville as usual. Big up yourself, Lavar. Danny is all the way in Montego Bay. Shout out to you, Danny from Bay. Roger Roberts says, good night, tuning in from Kingston, Jamaica. Doheny Park in the house. Let's get this money. And Steve McCalla, another regular, tuning in all the way from Toronto, Canada. Anthony Neal is in Portmore. So shout out to everybody who is watching all across Jamaica and all across the world this evening. We have a good one for you tonight. And every week it is a good one. Every week we have a good show, especially in your company. But tonight we are talking about Fesco. So Fesco, which you know is a fuel distribution company primarily, is reporting a $97 million increase in net profit for its fourth quarter compared to $37 million in the previous year. That's a 162% increase. Isn't it nice? Especially now that many of you are shareholders, you're probably very happy to hear that. So what drove the company's high performance? Well, we'll find out from Fesco's managing director, Jeremy Barnes. Hi, Jeremy.
Hi, Kalila. Hi, Jamaica. How are you?
It's so good to talk to you. It's been just about a year, over a year now. I can't believe time has gone so fast, and it's been more than a year since your IPO. So fill me in on the past 12 months and change since that momentous occasion.
Yes, it's been a long year. It's a long COVID year, but it's been a very prosperous year for Fesco and our shareholders. A lot was achieved this year. We opened 2 new locations. We got tremendous support, and we continue to get tremendous support from the motoring public for all our locations. And that's really what drove our profits and keep driving our profits is that we're getting tremendous support from the motoring public. It's not so much a factor of the increased price in fuel; it's more a factor of increased liters of fuel we've been able to sell during this period.
So, all right. So a lot of us, and you brought up this point. I wasn't going to get to it yet, but since you brought it up, a lot of us have been observing that increase in oil prices and the increase in fuel prices. And you're saying that that does not contribute to the increase in the profit margin that you are seeing?
Not as much. What we have been experiencing is we're keeping our margins pretty much constant because we're getting this tremendous support. So actually what we're doing is actually selling more liters of fuel.
I didn't catch that last part.
We're selling more fuel,
Yeah.
not just
Yeah.
a dollar, dollar figure per fuel. We're actually selling actually more liters of fuel.
And that's the result of the new stations that you've opened.
Yes, in part, and also, the existing stores prior are also, getting tremendous support. In addition to that, we have industrial fuel sales. So we do sell to the construction, manufacturing industry, and those sales have also picked up. So generally speaking, sales across all divisions has increased. We've been selling more water, more oils, more lubricants. We've been selling everything has just been better. I mean, we really are grateful to the public for the support they have given us. And
Well, that's really great news. Do you think that the publicity that you received from the IPO had anything to do with that? More people being aware of the company and seeking out Fesco stations?
absolutely, I think the listing was, very helpful. In addition to that, we never really had a presence in Kingston and St. Andrew. Some people who, live in Portmore, are familiar with the brand. But the opening up of Beechwood Avenue Station and Ferry Station actually it gave a lot of people in Kingston and St. Andrew that could actually see the brand and, they have affinity with the brand. And that has translated into tremendous opportunities. We have opportunities to grow, more people calling us to try to, develop projects with them, which we're, we plan to take advantage of. But generally speaking, I think the visibility of, listing along with the visibility of these two new stations have, allowed people to, see and touch the brand and be able to purchase and make purchases, based on a company that they own and they benefit from.
I know among my followers, there's an excitement about the company being part owner as a shareholder, feeling like you're invested literally in this company now. But, all right, so you've reported increased profitability last year, particularly in the fourth quarter. But then the beginning of this year now, we are looking at this dramatic increase in oil and fuel prices. And we did a poll last week asking how people are coping with it. And a lot of people, by far the majority of people, said that how they are coping with it is driving less. Are you seeing that impact on sales right now? Like, are you seeing people cutting back on fuel?
Okay, here it is. I guess this is a disclosure. Like it's a public forum, so it's going out in the public. To be honest, at this moment, as at the end of, we're just in the middle of May. At the end of April, we have seen no reduction in liters of fuel sold. Actually, we sold more liters of fuel in April than we sold in March. So what I believe is yes, people will cut back, but just the economy has just opened up. A lot of people haven't been able to visit their family or go country or enjoy themselves for a very long time. So there's a pent up demand to actually travel, and we're seeing that people are traveling.
Right. So indeed, there is a pent up demand. But I mean, with prices where they are right now, I wonder, as much as we want to go out, and summer is approaching, summer tends to be a heavy travel period. People, going to Negril, going to Mobay, Ochi, wherever, taking road trips with the family, holiday weekend. I don't know if people will be able to afford it. I wonder if in your planning, if you consider things like that, or you just tend to go with what it has been in the past years.
No, we look at everything actually.
Yeah.
We look at that, but also look at what's actually happening on the ground. What we also noticed that even with the pandemic, when there was restriction on travel, you see, Fesco stations have an interesting value proposition in it. We're excellently priced in product. So sometimes what you find happening is that even with now where people are cutting back, they're cutting back at their other stations, but they're coming to a Fesco station to get that fuel because of the value and the price point at which we sell the fuel. During COVID, where they were restricted opening hours, the Fesco brand has additional services there. So you found that people were coming to our Fesco where they were not going to other stations because we had additional services at a supermarket, Western Union, you name it, a restaurant, tasting restaurant. So we did grow again, same store sales during COVID, and again now, even when people might be thinking of cutting back, they might be thinking of cutting back at other stations, but so far again we're grateful that they have not been cutting back at our stations.
You definitely raise a good point because whenever I pass the Fesco by ferry, there's always a line to get gas at your gas station because your prices are quite competitive and they're on the lower end for Kingston based on my observation. Let me get into some of the questions from our viewers because the questions are starting to come in. The first one comes from Khalil Mitchell. He says, question for Mr. Barnes. What policy does Fesco plan to implement to improve the customer experience across the entire retail?
Good question. Excellent questions. We look at a lot of stuff at Fesco. We even look at Google reviews. Google reviews allows us to. Google reviews doesn't limit the type of question and responses that customers, believe or when they experience a service station or any other business. But we found that gas stations, people want certain things. They want a clean environment. They want to be able to come in and come out efficiently. They want somebody who's pleasant. They want a pleasant surroundings. What we have done, even at Ferry and at Beachwood Avenue, just to give it two examples in Kingston, we've actually have traffic wardens that help direct the flow of traffic, so you don't have that confusion where you have long lines waiting for gas and it just seems so haphazard and disorganized. So we have improved, the customer experience by having those traffic wardens. In addition to that, we started a training program where we kind of train people with more, hospitality training, which is a complement to the safety and the transaction and how to operate, the machinery or the equipment that they use. So, we do take customer service seriously, but the metrics that we use to, measure it varies. It's dependent, it's more attuned to what the output that the customer wants. Again, what the customer seems to want, they want a very well lit, secure environment where they can actually get the gas and process a transaction pretty quickly.
The next question comes from Philip, who wants to know, will you be selling LNG to companies for power generation or will it only be to transport LNG?
Currently, LNG has taken a step back in what our plans. We're more focused at this point in time on transportation fuels and LPG.
Okay.
When we do LNG, it will be focused on LNG for transportation at this time.
All right. The next question comes from Jason, who wants to know, what's the plan where electric vehicles are concerned? Good question. I'm seeing a lot of Teslas around the place. Charging stations, Jeremy?
Again, I think I said this before in another forum that charging stations at this present time is not a business. It doesn't generate returns. It's not yet. The technology is not finished yet. So at this point in time, there's no return on investments. And I know you guys would pressure me if make investments that generate no return and doesn't hit the bottom line. So at this present point in time, we're watching the market. We are very attuned to everything that's going on in electric. But at this point in time, it's not an investable opportunity that generates an ROI.
It's one of those things where, some may make the argument that if you build it, they will come, because part of the reluctance of people to buy electric vehicles in Jamaica right now is that, they think about what about the charging opportunities? And if there are more charging stations across the country, if there's a reliable network, then I might consider investing in an electric vehicle. So it's a kind of chicken and the egg situation.
Well, there's a lot more to it than that. There's a lot of legislation that is required. There's a whole lot of infrastructure. I don't think the technology is even for a location like Jamaica. Remember, when we have to think about hurricanes, etc. So when you look at electric cars, I remember Gilbert. Again, I use this example where or even Puerto Rico recently, where you can have an event where you knock out power for over a month. Do you want to include the transportation industry in that mix of industries that are without power? I know you can't move around. In addition to that, our power lines are run above ground, in the air, which again makes people more susceptible. It's not run underground. Thirdly, when you look at the price point, there is, the price point of electricity, how it's climbing, with the cost of electricity from JPS, and JPS being the sole provider, so sole distributor licensed to sell electricity in Jamaica. At this point in time, Khalid and guess it's just not a business. And again, you guys would crucify me if I invest in opportunities that don't yield a return.
Hmm. All right, let's take some more comments because there are a lot. Lots of people are interested in Fesco, Jeremy. Natoya wants to know how many service stations in St. Anne, and will there be more? The Ochi prices are too high, and we need Fesco there. And trust me, St. Anne has probably the highest gas prices in the country, from my
Absolutely.
observation.
Absolutely, and that is an opportunity for us. We have one service station, an excellent dealer in Golden Grove Center, and they're doing, tremendous, business in Golden Grove, and we appreciate them. Yes, we have, Killing we're all over the country. We have a lot of opportunities. The truth is, a gas station from concept to execution can take anywhere from 2 to 3 years. So yes, we have plans, projects, and opportunities in Senton, that we're actively pursuing. I don't want to name the location yet, but we have drawings, we have land already, or a dealer has land already, to execute, a station there. But again, these opportunities take, two to
You
three
say you
years.
don't want to name the location, but I don't know. I'm hearing Drax Hall is just a very hot location right now, so I'm making a guess.
I can't say where it is, but there are some opportunities in Senton, and we are looking across the country at all of these opportunities. And again, they take time to execute. We like to, when we do a station, we like to do it well. So. And the thing is, when you make a station or you're planning for a station that's 2 or 3 years off, you have to plan for what the environment or the situation in Jamaica would be 2 3 years off. So we take into consideration when we're making our plans what we envision that area or that location will be, when we actually do open. But Sentan is an interesting proposition. But at this point in time, not for the next 12 months, we won't have an additional location in Sentan.
Not for the next 12 months. So where will your next location be? What you're eyeing as the next possible or next very likely location?
And uh, call me in the next quarter, and that's when I'll be announcing those stations. We like to announce them.
Oh, stations, more than one. Okay.
Oh, I just slipped something. Right, but when we're opening the station, that's when we make the announcement, and you'll be first to know, and your listeners and viewers.
All right. Next question comes from, is a follow-up really. So this one is from Khalil. We were mentioning about the high prices in St. Anne, and Khalil wants to know if there are any plans for standardization of the price of fuel per liter across the dealer network. And he said, please take a look at the Fesco location in Portmore. What you saying about Portmore? Is high or low? I don't know.
Portmore is a very competitive market. Prices are pretty low in Portmore. No, we have no intention of standardizing prices because we do not set dealer prices. Our dealers are independent business people that set the prices at their location depending on the various factors that they have. The price at a station is dependent on the transportation cost to get the fuel there. Is dependent on the services that you offer. If you want security guards there, giving you protection. If you want to be well lit, clean, there are different input costs that determine the price. There's also the competitiveness of the trading area, and the actual volume of liters that or the number of people that use that station or live in that community. So if you have a smaller community and there's not many much motoring public, there's from a dealer's perspective, they can't necessarily drive low prices because there's just not the amount of volume or uptake of the service to warrant a lower price. And again, as I said, our stations are mainly dealer operated, and they run independent businesses, and they make the best decisions for their businesses, and we do not interfere in their pricing.
Fair enough. fair enough. I mean, there are different prices in different areas of the country, and depending on location, you have different factors that come into it. So your rent, your
Correct,
transportation cost. Yeah,
correct.
yeah,
Staffing is different in different locations,
exactly.
and the costs, everything is different. So,
Exactly. All right. So Javon is asking about, there's been a lot of talk about global recession coming, or at least in the United States. I know US sneeze, Jamaica catch a cold. So Javon wants to know, how does Fesco plan to maintain and possibly increase sales overall, especially with the pending economic downturn predicted of a recession?
well, there's no secret that Fesco plans to grow. Um, we're very ambitious at Fesco. So, recession or not, if it comes, we plan to grow, we plan to diversify. It's no secret that we want to go into the LPG space. We're starting that from scratch. So, once you're starting from scratch, we're at zero market share currently. So, we plan to grow. We plan to grow through, recession growth periods, whatever comes our way. We did the IPO during COVID when everybody was, not everybody, but a lot of people asked us why would we pursue IPO at that time. But
Hmm.
we believe that if you're committed to something, and you put in the work and you analyze and you do research and you, you you believe that you will be successful and the data backs you, why not move forward? I mean, I believe that our team here has enough experience in the industry. We work very hard. We work very, very hard, and we trust our customers. We trust the value proposition of Fesco, and our diversification strategy. I think it will, whether there's a recession or not, we believe that we'll be able to grow.
So another question, I gotta big up my viewers now. My viewers have some very intelligent questions every week and they just keep them coming. So this one comes from Roger. Earlier we spoke about LNG and you made the distinction between LNG, LPG, propane. So Roger is asking about that. When will Fesco start entering the propane gas market? And is the $1 million bond that the company has done, why wasn't I able to buy into that bond?
Okay, two good questions. We'll be entering the LPG market as promised before April next year. The $1 million bond was,
Was it million or billion?
sorry, $1 billion
Oh, it was a
bond.
billion, yeah.
Yes, along with our retained earnings and our cash, we use that to acquire LPG assets, which will include cylinders, etc., to execute that business. And why he wasn't able to buy that bond because the arranger broker NCB wanted it, and they wanted it all, so they took it up.
Well, good for you. So, how far along are you with those plans in using those funds?
We've started already. We started even in the last quarter. Some of our receive what you call prepayments. We started to make prepayments on many of these assets. So, but with not just with COVID, but with the logistic issues around the world, it takes time to actually manufacture and ship and bring items to Jamaica. But we've started a long journey of acquiring these assets, and over the next before April next year, hopefully all these assets will be here for us to deploy.
So, we started out the segment by saying that Fesco has reported record profits. The profits are up 162% for the last quarter of 2021. So, of course, your shareholders will ask, and here comes the question from Mega Anthony. Does the company plan on paying out dividends this year to the huge profits you have made this year?
Absolutely, we already declared our dividend last month. We're going to pay it June 24th. It's an interim dividend, and we'll pay the final dividend later this year. We made a promise, and our dividend policy does state that we're going to pay a minimum of 25% of the audited profits for the year. So there is a dividend coming on June 24th, and there will be another dividend later on in the year. And going forward, we will continue to pay a dividend of a minimum of 25% of our profits.
Right. All right. So next, let me ask Let me ask you this one, because you do know there is an expansion in the highway network. The government is building roads all over the country, and one that is currently underway. We had Trans-Jamaican Highway on very recently. They're expanding the east-west between Maypen and Mandeville. So, are any of your gas stations located along the Trans-Jamaican Highway? And um, is there a possibility for a partnership between Fesco and TJH in the future?
I'm definitely give them a call after this.
Yeah.
Um, we do have, service stations, along, the really existing highways. We have Lakovia, if you go in South Coast, you have Ferry, which is a jump off point for everywhere. If you want to go South Coast or North Coast from Kingston and St. Andrew. But we are looking at properties along the different corridors of Jamaica, and we are assessing each one. And Kalila, to be honest with you, looking at the preliminary numbers from the ministry, last year or December, the quarter that closed December, that's the data that they have. There's a tremendous spike in the consumption of fuel. So I do understand that a lot of
Well,
times
you
it's
mean
about
last year, 2021? If you're comparing it
2021
to, but if you're
December.
comparing it to 2020, there would be a
No,
tremendous
no,
spike
no,
because there were
no, no.
lockdowns in 2020.
No, I'm not talking about that. I'm talking compared to pre-COVID. There was a
To
tremendous spike,
pre-COVID.
right? So I know a lot of us talking about there's recession in different, I guess, in the overall economy. But I think when it comes to travel and I think there are just more cars on the road, and I think that more people want to move around the country and do the things that they weren't able to do for a long time. So um, remember, for a long time, school wasn't in. I had to go to school via Zoom. So a lot of factors have changed, and people want to go out on the road. They want to visit their family. They want to see people they haven't seen in a long time. And I don't believe that trend is actually changing, or it's not changing as yet.
Mm. All right, let's take this final question from our audience, and it comes from Craig, who wants to know, is Fesco looking towards acquisitions? So, are there any plans to take over some existing stations, example, Rubis, etc.?
No.
Nice short
Simply,
answer, short and sweet.
simply put, no. If an opportunity is introduced to us, maybe we'll consider it, but we have no intention at this point in time to do so.
All right. Well, thank you so much, Jeremy, and we wish you all the best on your journey with Fesco. We look forward to even more profits, right? Let's get this money.
Absolutely. Thanks again. Thanks for the opportunity to speak to the public. And
All right. So, viewers, take our poll for this week. What is your reaction to Fesco reporting massive profits for their fourth quarter ending March 31, 2022? How do you feel about that? A, not surprised since gas prices are so high. B, time to buy Fesco stock. C, time to sell my Fesco stock. Cha-ching. Or other, you can just leave a comment and you can take that poll on the community tab of my YouTube channel at youtube.com/KalilaRay/community. Or if you're using a mobile device, once you're scrolling, at some point in time, it'll probably come up on your feed. So take tonight's poll. What's your reaction to Fesco reporting massive profits for their fourth quarter ending March 31, 2022? Up next, we've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agency, insurance made easy, and
Download today. Register using your existing NCB online banking login credentials. To open an account or get more info, contact our Wealth Hub today.
Time now for your market recap. The JSE Combined Index traded flat last week, falling by only 7 points or 0%. 118 stocks traded across the main and junior markets for the week, ending Friday, May 13, 2022. 45 advanced, 65 declined, and 8 stayed the same. Nearly 192 million shares changed hands on the Jamaican dollar market, valued at $1.8 billion. Derrimon was the most traded stock, taking up 10% of market volume, with people buying and selling nearly 20 million shares in the company. The stock opened this week at $3.29. After recording massive profits in their recent financials, Spurtree Spices traded the second highest volume. People bought and sold 17 million shares in the company. The stock's price gained 6 cents to open the new week at $4.03. And JFP rounded out the most traded, taking up 8% of market volume, with nearly 16 million shares trading. The stock was also this week's second biggest gain after Mayberry Investments. JFP's price rose 26% to open this week at $1.63. Now let's see who else had the biggest gains for the week. Mayberry Investments stock jumped nearly 28% to open the new week at $11.25. And iCreate is up another 18% to open this new week at $4.01. On the losing side now, JMMB Group 7.25% was last week's biggest loser, down 26% to open Monday at $2.85. Jetcon was the second biggest loser, down 21% to close last week at $1.42. And Portland JSX was down 20% to close last week at $8.67. This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers.
As well to hit that like button on this video. Like the video, guys. Also leave a comment in the comment box and share with a friend. Let other people know that you are watching this video right now. Share it on Twitter, share it on Facebook, share it via WhatsApp, whatever your favorite medium is. Let people know about the show. And of course, like I said, hit that like button. So it's time for the analysts. And as usual, there are quite a few things to discuss this week. And my panel comprises of Assistant General Manager of Trading and Treasury at JMMB Group, Greg Lindo, business writer at the Observer newspaper, David Rose, and financial coach, founder, and CEO of Profit Jumpstarter, Keisha Bailey. Welcome, everybody.
Hi, Kalila. Thanks for having us.
How you guys doing? Everybody's good?
Yeah.
I'm tired.
Great.
Me too.
Tired. That's just
Was
my
that
honest
David?
response.
Oh, yeah. It's kind of. I was feeling it this evening, but the show kind of energizes me too. Once I start, I get pumped and end up always staying up late on a Tuesday night because I have this high coming off of the show for some reason. You guys get my adrenaline going, you see?
Yeah.
All right, so let's start with Fesco. We just spoke to Jeremy Barnes from Fesco. Their results are out. And Greg, I want you to give us your analysis of their performance so far.
Yeah. So I think Fesco has been doing pretty good. The results really speak for themselves. They have shown pretty strong growth across their top line. They've shown pretty strong growth in their profitability, and they have taken on new stations. They're growing and the market loves it. I mean, stock is up 108% year to date. This was a stock that was listed at 80 cents. It's now up to $6. It went as high as $8.49. And the multiple is high. It's a little bit higher than the rest of the market, but certainly the expectations of growth and the performance that the company has exhibited in many ways justifies that. So I think looking forward, stock market investing is really about the future. There's a high expectation for growth, and Fesco has set a pretty high bar for themselves that they'll have to continually live up to, given that the investors have traded, or they're so bullish on the shares. So they can't afford to take their foot off the gas at all. They need to be pressing gas, which is good for the business that they're in, right? So yeah, I think it's been a good ride for them. They issued debt from the $1 billion bond at like the ideal time. They raised debt at 7.5%, whereas the government of Jamaica today is borrowing 90-day T bills or borrowing on the T bills at 8+%. So if they were to come to the market now, they'd probably be looking at raising debt in maybe double digits. So it was a pretty good move for them to secure that transaction. That of course, as Jeremy mentioned, is going to be invested in projects that are going to give them a return. So they have good funding, and it's just to see them execute that phase of the transaction now to get into LPG.
Yeah, I noticed you're absolutely right. Those interest rates are starting to creep up as a result of government Bank of Jamaica policy. I
Yeah.
saw a notice from Sagicor saying that they're increasing the rate on their variable loans as well by I think David, is you sent it to me, right?
Correct.
Yeah.
Going up by like a 1.5%. Like
Maximum.
yeah. But let's talk about another company that we actually have not spoken about much on this show, surprisingly. And this company is a behemoth in the world of Jamaican business, in the world of the stock market as well. And that company is, any guesses, audience? Which company you think I'm referring to? NCB, duh. NCB. So NCB has recently issued results, and David, you have scoured through those results. They actually hit a record Q2 profit. So tell me your observations based on NCB's recent financial performance.
So what you saw within the quarter, was whereby NTB Financial Group was able to deliver a 295% increase on net profit attributable to shareholders to the tune of $7.79 billion for the second quarter. And the growth came from the banking side, especially with regards to the reduction in the credit impairment provisions, alongside the rise in net interest income, in turn meaning lending more to businesses and consumers. So that is where you saw the growth in the period. And although the insurance segment, had a rise as well, the general insurance segment, with respect to Guardian Holdings, had a decent dip. But when it came onto the life insurance, life, pension, and health, that was the strong driver of operating profit for the overall group. But the key thing that I took away last week from the briefing was that the increase in interest rates. So first, you had Jane Bank saying, "Hey, we're going to be raising our rates on our loans come June 10." Then you had NCB Jamaica, which is a subsidiary of NCB Financial Group, saying, "Hey, we're going to be increasing rates from March on new facilities, and as of this month, we're going to have to be increasing the rates on existing facilities." And then you have Sadrika Bank coming in now saying, "Hey, we're going to increase rates as well." A person going to be like, "But the banks make money, so why didn't increase rates?" So for context, the banks borrow or quote unquote, take our deposits and lend them out. But the banks also get funding from the market in the form of overnight facilities, they borrow from other banks, for example, and that cost of funding is going up. And financial institutions, such as NCB, they maintain a minimum margin spread in a sense, in terms of being able to actually, keep their profitability and operations at a particular level. So right now, because they're seeing that increased cost of funding, as Greg highlighted earlier, they're trying to, adjust or make that balance by increasing the rate on the variable rate loans. But as it was Mr. Blake obviously mentioned, it is a tricky thing because it's a double-edged sword. Because if you increase rates too quickly on your consumers, or in the case your customers, your NPLs or your non-performing loans might spike. And NCB wrote off more than $3 billion plus last year in non-performing in this loans, which was a historic record for them. While their competitor BNS, Bank of Nova Scotia, Jamaica, wrote off $5.3 billion worth of loans, another historic record. And across the entire commercial banking system, all banks in Africa loans. So although you see the bounce back in Clarion, you're seeing the continued growth in Guardian Holdings and so forth. NCBJ is going to be put to a serious test going forward this year. because people are really stretched. Fesco came on a while ago, but Fesco, is just putting on the margin and increasing their prices accordingly as gas prices go up. Inflation is hitting a lot of persons. Supermarket, gas station, you go to buy a beef patty, which is now $240. But when before COVID, it was 180. So, it's going to be an interesting time to see what's going to happen right now, because the BOJ's MPC, Monetary Policy Committee, is meeting this Thursday, and I feel they're possibly going to raise rates again, which is going to be quite a difficult thing.
Yeah, but and this is the thing, right? So isn't this what the BOJ kind of wanted to happen? So in them raising their policy rates every however often they make the decision, it sends a signal to the banks, and then the banks are expected to raise their rates as well, and they're hoping that that kind of cools down economic. Well, I don't even know if cool down is the right
But
word. But isn't this what they anticipated and wanted to happen?
Here's the flip card, though, Kalila. The banks resisted for a good time to try and not increase rates while absorbing where they had the possibility. Because think about, as I mentioned earlier, they wrote off record amount of debt last year, and when the NPLs, in this case, non-performing loans, go up, the BOJ is going to come and say, hey guys, sorry for the increase in your bad debt. Let me give you a little stimulus or whatever, like the US government. No. So it is a move by the BOJ to try and tame inflation where possible. But as somebody pointed out, in this case, David won in an article in Observer today, it's going up too fast based on where we are as a recovering economy. We just had the Dermary move back in March. The economy hasn't gotten a chance to actually breathe. And as we step outside, it's $10,000, as somebody says. Like, consumers really are put a serious test. As somebody said, people are choosing to literally have the sardine juice as breakfast and the actual sardine meat as dinner. Like, that is just the reality, and which is very tricky. And that's not joke, that's just a sad reality. People choosing to do that right now just to survive. So the BOJ's actions, are quote unquote noble, but what's the information we're seeing right now is external. It's like under the control of the local banks or even local businesses. It's just external factors impacting us. And I really put them up Sri Lanka.
All right, so I think that's the perfect segue for us to discuss, kind of the elephant in the room now. There's been all this talk of a recession, so it's a great point to bring Keisha in as well. There's been talk of an economic recession coming in the United States, driven by, in part, these policy rate increases, because Jamaica is not the only country that's been taking this approach. The Federal Reserve in the United States has been doing the same thing. So what's fueling these concerns about a recession coming, Keisha?
All right. So we're seeing globally interest rates across different countries are increasing. So not just Jamaica, US, you have Canada, the UK as well, Eurozone. Interest rates slowly are going higher because globally inflation is a problem. And one of the main tools that central banks have to combat inflation is interest rates. And a lot of central banks have been targeting inflation as their main barometer of economic progression. So because of that, we're moving interest rates slowly higher. I guess the skill in it for the central banks is the pace at which they increase interest rates, because if they go too fast, they can struggle, they can kind of stifle growth in the economy. And if they go too slow, they have no impact on inflation, and inflation will just continue to trend higher and higher. So what happens, it's this nice dance of how do I move, but in such a way that I don't stifle economic growth. Now, why we're hearing a lot of talks about recession is because persons, investors, and the media largely are raising news around recession. Is the Fed moving too fast? Is the BOJ moving too fast? Is the Bank of Canada moving too fast with their rate increases? Because the central banks have been more aggressive than they were previously. We went through many, many years of low interest rates, and everybody got used to that. No kind of pulling the rug from below everyone and saying, all right,
it's so funny that you said that we went through many, many years of low interest rates, because before that we went through many, 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 many years of very high interest rates.
Exactly.
So we finally got some reprieve, and that became the standard. And now here we are going back up.
Right. So everyone is now saying, what's going on? The Kool-Aid, the Kool-Aid is over. The party of low interest rates is over. And that's what's causing a lot of worry. And because of that, people are starting to dump stocks. And we feel that in the stock market, because if inflation is high and the central banks are raising rates, people start worrying that the net profit for companies may go down and profits move share price. So persons start selling thinking profitability will be impacted. That's what's happening now. And then a lot of the top banks have been putting out research saying the odds of a recession are increasing. And that's fueling more sell off in the market.
So are we seeing that same trend here in Jamaica are we seeing the same type of sell-off? Are we seeing the same type of predictions for a recession, or is that unique to the United States?
I think it's more unique to the US and possibly some other countries, maybe Canada way behind, but Canada is benefiting from higher oil prices. But the main concern is in the US because we had 1 quarter of negative GDP growth. In Jamaica, GDP is actually improving. So there's not so much a worry. Remember, recession is 2 consecutive quarters of
Right.
negative GDP growth. We don't have that in Jamaica. We have the exact reverse. Also, the stock market here is doing fairly well. Year to date, we're up on most of the indices. So no need to really have worries about recession here in Jamaica, but US, the concerns are increasing.
Greg, I'm eager to hear your thoughts on that. Are your clients or you guys there, your JMB team, expressing any concerns about a possible recession? And Keisha made a great point. Recession is defined as 2 consecutive quarters of negative economic growth, and we haven't had any negative growth in a while, well, since COVID. Although we're still kind of in COVID, but we're recovering from COVID. So, but are there any concerns about a recession for Jamaica, or what impact a US recession might have on Jamaica at this time?
A very good question. So there are concerns because interest rates, the BOJ has been pretty aggressive in their interest rate policy changes from coming from a low interest rate environment to now trying to curb inflation. And essentially, they're front running the US Fed because the Fed is now starting its cycle of increasing rates. The last rate increase that the Fed did was at 50 basis points, which was the largest increase in decades. One increase of 50 basis points, right? BOJ has been raising by 1%, 1.5%, because they're trying to get in front of it. So that tells you that if things really go south in the US, because I think the last research I saw, I think one of the main US investment banks said like a 35% chance of recession, then we have to reasonably expect that's going to play out in the Jamaican market too, because we're very dependent on our source markets in the United States and Europe, etc. However, what the dynamic I'm seeing is that we've seen yields on government bonds increase substantially. So whereas government bonds that used to trade at 4%, they're now trading at 8%, 9%, which is a doubling in the yields. But as it relates to the stock market, I think institutional investors, they are a bit more concerned, mainly because of their exposure to fixed income assets. Equities, I would say the performance has been moderate, but the truth is, if you look at retail investors, they still see the local stock market as a much better avenue to generate returns on their portfolio than bonds, because the Jamaica Stock Exchange has been outperforming bonds since 2015 or so, right? So you're not starting to see a slowdown yet. But for me, I would pay attention to what the banks do with interest rates, because if you start to see car loans reprice higher, mortgages reprice higher, business loans reprice higher, then that's normally going to have a pull, or it's going to have a negative effect on person's disposable income, because your car note is now maybe was 60 grand, now it's 75 grand. Your mortgage was 150,000, maybe is now 175,000, and you're gonna have to find that money. So that may mean you may have to scale back because you can't scale back on your mortgage payments, right? You have to make payment. So that could have a potential impact on liquidity, right? Because the BOJ is trying to mop up liquidity, and they're going to be pushing on the banks to transfer these rate increases that you're seeing in the market to consumers. And I don't think we've fully seen that play out yet. But certainly, if that does start to happen, you would definitely see a slowdown in activity, because persons are not gonna cut whatever discretionary spending they have and focus more on meeting their obligations. So we're not in an environment where I don't think our GDP's growth is past what it was pre-COVID. So we are still in the recovery phase where you have that base effect where you're comparing it to maybe 2020, 2021. So that the GDP growth looks good, but the BOJ is ultimately trying to slow that down, and by extension, well, through inflation targeting, the natural impact is going to slow down growth, right? Because growth pushes inflation. So, I'm not seeing the effects of that playing out in the market right now, but it is a headwind that you have to keep your eye on, because when liquidity is being taken up out of the system, it has to come from somewhere. So at some point, retail persons might start to feel this. I think businesses are starting to feel it too, because the cost of financing is going to go up, which means the finance cost line, when you guys looking at financial statements in 1 year, is going to look a little bit more for the companies that use and have to issue debt. Same thing with households. If you have debt, you need to take a very close look at how you're going to strategize to manage that, which means either you're going to increase your disposable income so you can keep pace with your investments, or you're going to have to cut from somewhere else.
That is the truth. That is the truth. Yeah, I think a lot of persons are underpricing the impact of rising interest rates and what that will do to your disposable income and what that will do to your pocket. Rates going higher will impact your credit cards. So as much as outside I keep and everybody's there spending, we have to be mindful of the credit card debt, because when the other sources, when the other expenses start going up with that, it is gonna be tighter, as we say, hustling off a tunnel. Definitely, these are the times for hustling, for sure.
Kalila, can I add to that? Yeah, I think you're muted, Kalila. Still can't hear you, Kalila. Oh, well, I was going to just add, as Greg mentioned, and as a question by Javon Russell in the chat asking, how does the increased rates affect consumers? So Greg mentioned it, for example, a while ago, but let's just break it down in context with our current environment. So you used to spend $200 to go from, for example, let us say from UA campus down to downtown, right? Now it's costing $270. That's an extra $70 that you have to be taking from some other part of your disposable income to put to transportation, right? If your variable rate loan goes up by 1%, and let's just say, for example, you have a 60 grand loan, then $600 doesn't seem like much. But depending on the type of income you have right now, and if you have earning extra income and you're already feeling the squeeze on food prices, fuel prices, and other general items you're buying in your daily diet, it's going to be a very significant impact. Although, the rate increases by the bank seem very minuscule right now, for the consumer side, you have to remember that the persons are feeling the pressure right now of increasing prices overall. And as Greg mentioned earlier, the cost of borrowing is going up. So last July, the 180-day Treasury bill yield was 1.2%. Back in January, it was 4.34%. And last week, when they did the most recent auction, it was 8.25%. So you can see that it's that steady correlation in terms of rising yields to the BOJ's policy rate increases. And what that does is that companies such as Seprod or GMB is variable rate debt, they're going to have to be repricing their debt for higher and higher. And I did a calculation last year. whereby at the time, I think it was in December or November, right? I said that if JMB's preference share will reset to around 5% based on what I was seeing at the time, that's about an extra $400 million just to service that debt. And I just think it's like JMB. And when businesses are forced to, be tackling the rising cost of raw materials and supply chain shortages and so forth, and then have higher financing costs, you're just gonna have a very tough battle. And companies are choosing to increase prices, but slowly and not too quickly, because end of the day, we're seeing the impact of just these rising rates. Because, for example, in the case of NCB Financial Group, under their other comprehensive income line, they had a $17.71 billion reduction in their assets, valued at fair value of the comprehensive income. And you must have to Group Jamaica, $6.18 billion reduction in the value of their bonds during the first quarter. Because as interest rates rise, the value of bonds go down. So, it's becoming more kind of tricky for, as I said, institutional investors and large holders of capital to find a home for their money, as Rick alluded to. So we're going to be seeing a lot more shifting by companies and even investors, big investors, as to where, they can actually earn money to make sense. Because as what happened last week, crypto market crashed in the US, sorry, not the US, but yeah, Terra Luna crashing, Bitcoin falling as well, US market falling. The Jamaican dollar has been less for the last quarter, but BOJ in last week, so hard to guess.
Yeah, I did want to touch on cryptocurrency today because there's a lot going on in that market, the volatility. But you guys should know this by now. Crypto has always been volatile. This particular week, it hasn't been great on the crypto market, but we're kind of out of time, so we're not going to get to that. I do want to take one last question from one of our viewers, and the question comes from Kevin Jackson, who wants to know, how should we invest during this anticipated recession? So I'm going to direct that one to Greg and then Keisha. So just quick tips on what type of strategies should investors be looking at during a down period like a recession. Start with you, Greg.
Well, going into a recession, you should have cash, right? Cash is king. You need to have cash to take advantage of the opportunities. You don't want to be going into a high interest rate environment and using things like leverage because it's going to cost you a lot more. So you look for companies on the stock market that have products with relatively inelastic demand. Fesco is one such company. Gas is relatively inelastic. People will need it. You probably stay away from companies that are dealing in goods that are more of a discretionary nature, meaning they're more wants than needs. So certainly financial services is a sector that is probably large. It is the largest sector on the market, but you have to be cautious of how those financials are going to look, because they're going to have to, financial companies, investment houses, banks, they're going to have higher cost of funds, but how they deploy those funds is going to be tricky, because your costs typically rise at a much faster rate than the return on your assets. So I would stick to the solid, well diversified, geographically diversified, sector diversified companies. The conglomerates are a good place to look. Reason being, they give you more certainty in terms of earnings. But definitely you want to stay away from the companies that are more pushing the more discretionary type products, and they're more susceptible to slowdowns in like tourism, things like that. And this is if a global recession hits, and it's probably worst case. Yeah.
Keisha?
Yeah, so definitely on top of that, Greg. And when we think about this year, it is the year of quality. We need quality companies. So it's not the year of the new up and coming company that has no track record. This is the year of investing in quality companies with very little debt, because their debt costs will increase this year because of what we're seeing with interest rates. We want also companies that have pricing power. So as we see costs going up, these companies can pass on the costs to their consumers. So staples is what it is. You have to buy food, you have to buy gas. So you look on these companies as well. And discretionary stuff, things that I can cut back on, that I don't really need it because time's hard. We want to avoid those companies in times like these. And then on the bank side, it would be the banks that are into a lot of lending, because we get a little spread there, but we have to be mindful of the non-performing loans, because if the banks have a lot of non-performing loans, it's gonna impact the overall profitability. But low non-performing loans, great spread for the loans, and those companies will do well. Oh,
Thank you so
commodities as well. Commodities is it. Oil, gas, precious metals, all of that as well.
Any crypto?
Too volatile right now. That's the
Stable coins.
yeah. Yeah.
I feel like crypto is always volatile. I don't know.
More
the money.
That's
Somebody asked me my opinion on crypto like probably a year ago, and I say a heart have a strong, and I stand by it. You have to have a strong heart if you're gonna be in crypto. When it dips, it dips, and when it's up, it's up. You know, it just be like that with crypto. Thank you guys so much for joining me again this week, Keisha, David, Greg. Great having you.
Thanks again, Kalila.
Thanks, Kalila.
We'll take a very quick break and come back with your final comments.
The Analysts was brought to you by Jamaica Money Market Brokers.
Hey moneymakers, you're not an official part of the family until you have your merch. Visit KalilaReynolds.com/store to order your t-shirt and your mask today. Let's get this money. So let me take your final comments and reminding you as well to hit the like button if you haven't done so yet on Facebook or on YouTube. Like the video, guys. Give us a like. Let people know that you like this video and, giving recommendations to other people who may be interested in this program. Let me take some final comments from you. Richie says NCB has made moves as well in an attempt to decrease operating costs, closing branches and consolidating operations. Great point, Richie. Yes, my Richie. And then Philip says NCB is gonna be fine. It's one of those companies that, you may have heard the term thrown around regarding many companies throughout the years here in Jamaica and abroad. Too big to fail. I kind of feel that way about NCB right now. Lucian says mortgage is up as well to 7.5%. Well, it was lower than that. Like I know some places had 6.5%, maybe 7, but I feel like the averages, a lot of places still have 7.5 and higher, even at its lowest point. But if you're saying that, those ones that were in the 6 range are now up to 7.5%, yeah, the sweet spot for borrowing and for lending seems that is in the past now, and those interest rates are climbing up. And then Elrico says, he had a question for Keisha about the spiral of the NASDAQ, if she believed that it would spiral, if it would push even lower. Inga says, Kalila green looks amazing on you. Thank you, Inga. The color of money. That's why I like to wear it. Philip says, tourism is discretionary, but I don't see them being a bad choice at this time. Interesting, because if there is a recession in the United States, which indeed is Jamaica's primary tourism market, that travel industry may take a hit, and that travel tourism industry already is recovering. So let's keep an eye on that industry for sure. Shane says, if it's not stocks, it's real estate. Jason says, I would love to know how to invest in gold and silver and oil. So you can contact Keisha, because she was the one talking about investing in commodities. So she can give you an idea of how to get started in that. Ashman says, very useful, very informative. Thanks for the useful information. And thank you for watching, Ashman. And then Len says, Regency Petroleum IPO coming up in July. That's some breaking money news, Len. You have a date? I heard that they are pursuing an IPO. I did not hear a date. So if you're hearing July, well, let us see. We're in May now. That's in only 2 months, June, July. So let's see. Keep an eye out for that one. Flara or Fitara wants to know about JPS. That's something we have not heard about in a while. So let's see. And then Rich is saying entertainment going to take a hit again. I don't know, because you also have to consider the pent-up demand that people are finally able to go back out and party. So I don't know and what makes you think entertainment is going to take a hit, Richie? Let me know in the comments. Kevin Jackson says, alcohol tends to increase in sales during a recession. Facts. People take the entertainment to them yard and barbecue because, it's one of those things where if you're feeling kind of depressed, people tend to turn to something like alcohol. So let's see what happens there. And Richie says, food is a must. Yeah, food is a must, but the prices are going up. So people are cutting back on. You're still spending the same amount of money, but you're getting less food. So you're consuming less. Interesting. And Richie's all up in the comments tonight. Says the JMD will also be devalued, resulting in a decrease in spending power. So that's his prediction. And then Fitara talking about Bitcoin dropping. So yeah, lots of people eyeing cryptocurrencies this week. And that's how that's where we're going to leave it for this week. What do we have coming up for you on the platforms this week? Tomorrow is Wednesday. So tomorrow we're going to have throwback Money Moves JA edition. We are talking about exporting your product. So it's part 2 of that throwback series for Money Moves JA. We also have a new series coming out called Biz Talk. It's a limited series, 7 episodes. And the first one is about a conference coming up in Montego Bay. It's the AICE conference. It is the World Global, what's it called again? It's a global expo that Jamaica is hosting for the first time ever. Basically a BPO expo. So Jamaica is the host, and it's going to be in Montego Bay coming up in June. And our first episode of Biz Talk is all about that, coming up later this week. What else do we have for you? You can check out my page as well to learn about Scotia Elevate. It is a brand new product that combines investment and insurance. So that's posted on my page as well across all platforms. Remember to subscribe to the newsletter at KalilaReynolds.com/newsletter to get this information directly to your inbox twice a week. If you are new here and you like what you are hearing, you're interested, you are piqued, you want more information, you want to know how to get started, then consider my Investing for Beginners Masterclass, which you can subscribe to at KalilaReynolds.com/masterclass. And if you want to connect with the analysts this week, check the description box below for their contact information. Follow me all over social media. I'm on Twitter, Instagram, and TikTok at Kalila Ray. On Facebook at Kalila Reynolds Media, on LinkedIn at Kalila Reynolds. Where else am I? I'm all over the place. And just a reminder as well that you can check out all this information on the main website, which is KalilaReynolds.com. You can watch, you can listen, you can read if you prefer the podcast version. We're on all major podcasting streaming platforms. Tell a friend about taking stock, because investing is the new sexy. So let's make it cool to talk about money. I'm Kalila Reynolds. See you next time.
Let's get this money.